Welcome back. The purpose of this video is to highlight the use of the options profit calculator on unusual whales and to teach you what it is and give you the general idea of how to use it and how it can be of benefit to you in your trading. So we're going to get started, and just a forward, my name is Tarr. It's ProfitsTaken is the channel, and ProfitsTaken is the username on Twitter. I'm a former licensed stock trading professional. I got my license in 2005, as well as my license as an options and derivatives specialist. I then became a two-time Inc. 50 CEO, and I'm currently a private equity fund manager and a private wealth manager. So let's get started. Okay, I'm assuming that you start at, let's just say you're starting at the Unusual Whales homepage, or you could be in the flow. Either way, it's really simple to get to the options profit calculator. We just click on options profit calculator. So take a look here, and it's going to be right at the top of your screen no matter where you are. So it's really easy to access at any time, or you can pop it open as a separate window, which you might want to do if you're doing other work elsewhere. So let's take a look here. Here we have it loaded on the SPY. I'm just going to type in something a little bit different. It doesn't really matter. You could choose whatever company you're looking for. So you can see that you type in the ticker symbol there. And for me, I'm just going to go back to AMD to be consistent, and we'll load up and take a look here. So you'll see that there's a lot of different pre-built strategies, and I'm not going to exhaust all of them because that requires discussion of all the different various strategies that you can have when you're trading options. But you can see here that we have long call and short call, long put, short put. So for most people, it's going to be long calls and long puts. And what is that? Long just means that you bought a call or you bought a put. But you could be selling calls, you could be selling puts, you could be running spreads like credit spreads, debit spreads, iron condors, strangles, all sorts of things. For the purpose of this video, of course, it's more about the tool and less about the strategy that you chose, but it is valuable for you to know that you have set strategies there, and you can load strategies in and play with them and mix and match as you see fit. So we'll take a look here. So the long call, meaning let's say that we bought calls on AMD. All right, so we click on that and we go to this page here. So we're going to take a look, and then we'll break it down a little bit further. So let's see here. This is what happens when we pull it up. So how do you extract any value from that? Well, first of all, you have this, you may be familiar. You're going to have this feature in most brokers. You'll see that Thinkorswim has it. IBKR, which is what I use because it has much faster executions and not getting filled is far too costly. So I'm going to put the link to IBKR Interactive Brokers in the description here. But they'll all have options profits calculators. It's just a convenience for you. If you're already an Unusual Whales member and you're signed in and you don't want to switch back and go to your broker, you could use it here. Or maybe you prefer the layout, the user interface, whatever it is. I think it's a good user interface here. So we'll take a look and see what this does. But again, this applies elsewhere as well. So here you're going to see data on AMD. You're going to see the closing price and just the basics. And the way that this works is you're able to extract more value by getting a projection on where the options will go. So we'll go down in order here. So you see the 85 and you have the calls, right? And so you see the market price on those calls, right? So ask is 350, bid 340, and last here at market was 337. You see the IV, which is the implied volatility, the vega, the theta, the delta, the gamma, the rho. I know I ran through this quickly. Those are the Greeks, and those will give you a calculation based on how option prices move on your contract prices. I've discussed those in other videos. And then, of course, you have a little bit more information on volume in the plus 1 day there. So you see the net debit as we move down here. So this assumes that if you bought one contract, right, buys one contract, so that's 337. We know that's times 100. You multiply it, you get $337.20. That's how much you're going to spend. So that's how much you're going to be debited in your account if you have your brokerage account. What's your max loss? So that's pretty easy. Well, what happens if you lose 100% of $337.20? Then you lose 100% of $337.20, right? Max profit, that's always going to be listed as unlimited unless you're in some sort of spread, because the spread will cap that. But if you're just buying calls, it's just like buying a stock. We have to say unlimited. Is it limited? Yeah, it probably is. I don't think AMD is going to go from $85 to $1 million. But you get the idea. That's why this will always say unlimited unless you're doing some sort of spread or different strategy. So then we move down here. This is the more important part. That's just the basic data. And this gives you a general idea. Now, make sure to pay attention to the coming portions, as I'm going to explain some of the shortcomings with any options calculator and how it's a general range, and you need to understand that. You can't take it as gospel because it will not reflect exact price changes. I'll talk about that in a moment. But first, let's look at the chart and get an understanding of it. So assuming like this is your current price and you have your calls, right? So we have our calls, we have our contract, right? With our expiration date, 85 calls, September 23rd, 2022. This shows you how the price progresses based on the underlying. You see the underlying here, right? In this vertical axis, on the vertical plane, or vertical column rather, right? So if it goes down to, let's say this tells you what happens if on September 12th, that's our next trading day, that we're down to $81.60. Well, the calculation is such that you'll be down approximately 51% on your contract. So that means you'll be down 51% on this 337, right? And what does that work out to? You know, you'll be down about $170. So that tells you based on the date and price, right? So the horizontal column here, or axis if you will, are dates, right? All the way up to your expiration date. And this is price. So if we say that AMD stock, again, not your contract, if AMD stock is at 91.05 on September 12th, that's tomorrow, you should be up about 111%, right? So we trace it to September 12th, 91.05, right? And that represents, and we also see the percentage gain that represents on the underlying stock here. Now, one thing you'll notice, and again, I've discussed this quite a bit, and anybody who is experienced will know this. Again, this is just to give you a general idea of the feature here, and I'll break this down further. We'll have further strategies and other conversations. But you'll notice something, that at 91.05 on the 12th, which is going to be the Monday here, we're up 111%. But then it's 108, 105. And it decreases all the way down to 79.4%. It's a pretty substantial decrease. Even though there's no change in price, you see there's a drop. And in fact, as you look across the board, that happens everywhere. Here's a great example. If the price goes to $87.90 on September 12th, today is September 11th, so that's tomorrow. If it goes up to $87.90, right, then you'll be up about 43.4%. But if it stays there, you start losing money. You start losing money all the way to the point where on the 23rd, that's expiration date, it's actually 14% down. So what happens here? What is this? That's theta. That's time decay. As time goes on, the value of your contract drops. And I've discussed that a lot in different videos. I discuss it on my feed. ProfitsTaken Insiders, we understand theta extremely well with a lot of our strategies. But that just gives you an idea. So you can use this chart just to say, okay, if the price is this, then on this date, this is what will happen. It's important. I think the people this provides the most utility to are swing traders. And I'm going to explain the shortcomings here a little bit, just in general on options calculator, not specific to unusual whales, but all of them. And this is meant as a general idea. Why? Because we could get a big IV spike tomorrow. If there's some news on AMD, something really positive happens, and the move to this 87.90 is very quick. There's a lot of enthusiasm around the stock. I have a separate video on IV. Extremely important that you understand it. And this is how important it is. That number, instead of being 43.4%, could be exponentially higher. It could be 110% up, right? That big of a difference. It could be more than double based on the IV. If we see implied volatility just absolutely take off, right? That's because that's how IV works. And that's why it's not a perfect calculation, but it gives you a general idea. And this is typically best for people who engage in swing trading. If you're engaging in day trading, then you're not taking time to walk away from a day trade, particularly if you're scalping options. You're not walking away and pulling up a profit calculator. You're monitoring your contracts. You're in the trade. Once you get into the trade, the most important thing is the contract price. So this is more for swing traders who maybe have expanded dates or are trying to say, okay, this is how long I think it's going to work out. I'm buying in at this date because maybe I expect an announcement on the 18th, but I think people are going to start buying in sooner. So I want to get ahead of the curve and I'm buying in on the 12th. And this is where I project to be based on the, let's say the 21st, etc. It just helps you project forward. It's always good to have a loose general idea in your mind. I tend to eyeball that sort of thing and work within the contracts. But for beginners, for people who are maybe intermediate or just take comfort or, particularly those who are running spreads where the calculations eyeballing them are a little bit more difficult, then you get a lot of utility out of something like this. And of course, you get a little bit more data here on a P&L and what this is going to do. You have a lot of different options here, but this will just show you where you stand and you can hover your cursor over and it's all relative to your entry cost on the underlying stock, right? So it just shows you in a different graph and gives you another idea, another look at what kind of profitability or loss you're going to have based on movements relative to the underlying. So that's a general walkthrough. And again, you can use this for all kinds of different strategies. You could look at different things. You could look at target prices, ranges. There's a lot of different options. I'm using calls here where people are long on calls. But as I said, you can go back to the initial page, and when you're choosing, you could choose short calls, you can use puts, you can use strangles, iron condors, various spreads. Set things up as you wish, as you're comfortable with. So hopefully that gives you a little bit of a better idea. As I said, it's Profits Taken. If you want to learn from me directly, visit ProfitsTaken.com. And if you're interested in signing up for Unusual Whales and you don't have an account yet, when you do sign up, use Profits Taken as your referral code and you'll get a discount. So we'll talk a lot more in the very near future. Thanks, everyone, and hopefully this provided you with a little bit of a utility, or for those of you who didn't know, now you know there's an additional option for you there.